In the meantime, however, keeping it with the cap goods story and what kind of pickup in demand one can expect in the new financial year, Mr. M.S. Unnikrishnan, who's MD and CEO of Thermax, joins in with his views. Mr. Unnikrishnan, it's great to have you on the show. Thanks very much for taking out the time. We've seen a pickup in aggregate demand and industry momentum in India. Is the recovery only a year-on-year base effect, you think? Is it an anomaly, or is there genuine and sustainable turnaround in the works that perhaps the markets are not catching on or latching on to just as yet?
Well, if you look at the fundamentals, there had been a shift in the recent past. See, as Indian industry was tottering with a capacity utilization between 60 to 65% for almost 2 to 3 years, we have seen an uptick happening in virtually every industry in the recent past. Say automobiles are overflowing with orders. Commodity, especially steel, is now with maybe with the protection given by the government of MIP. Everybody is reporting a capacity utilization upwards of 70%. The government is talking about increasing the steel production from 130 million tons per annum to 300 million tons per annum. Cement industry capacity utilization is lifted from almost 60s to touching 75 plus in some of the locales. So put together, and in any case, consumer-facing industry, FMCG industry, durables industry, electronics industry had been reporting very positive results. So what has changed in the last year plus is consumption story is increasing in the country, whatever could be the reason for it. So the capacity utilization having lifted, many corner rooms in this country are getting worried about if the capacity is not going to be available for the next cycle to pick up, how will they take on? So people have started finalizing orders. So that is why the general improvement in the overall intake of orders. Now the next question is it across the board like what happened in 2003 onwards, or is it selective? Now, within the country, the expenses and the capacity building is led by the government of India. Like the way you mentioned, or your colleague mentioned, road construction is virtually more than doubled in the last 1 year. And the awarding on the EPC basis for road contracts have going to be an all-time high. Almost 30 plus kilometers per day basis is going to be happening. So, and cement and steel industry naturally will be picking up based on this. Durables, white goods industry is growth is and automobile is going to be supporting steel industry. So two sectors which I can see as a growth potential is this two. And I can also see the oil and gas industry with the Bharat 6 implementation going to be completed by 2019, and the quantum of automobiles that you're buying with all the electric vehicle story remaining in some storage for some more years, you need petroleum products in the country for that. So oil and gas is going to be investing. So some of the core industries have started showing uptick. So fever will catch on, and I'm sure investment is something very infectious in my understanding. So things could turn around to be positive for at least India for the next couple of years is my take on the entire scenario now.
I hope it happens, but one industry which may not do well and has been an important driver for capex and investment is power. And we both know that there is a challenge there. Uday scheme has not been great. Power demand has come down. Private companies are not investing in the power sector. So whatever other industries could gain, the power sector could be a drag. So how do you think things would equalize?
I am not very hopeful about the conventional power industry, Nikunj. Especially the coal-based power, which ideally should be invested by the country, because despite whatever anybody would talk about clean air, without power, I don't think industry can grow and population can grow. So temporarily there is a slackness, because predominant part of the power industry even today, whether it is related to capacity building in generation, transmission or distribution, is within the control of the government of various state governments, let's say. And most of the balance sheets are challenge, and I don't think any banking system will be able to support. So that is going to be a drag on the entire industry. But those who are directly and totally dependent upon power industry from capital goods will certainly have a difficulty. People like us have taken a major beating, having set up a joint venture to make supercritical boilers, not a single order for some number of years. We have taken a backseat for 3 to 4 years, but we found our own way to come out of the power industry and still make growth potential for the company possible. So I fully subscribe to what you mentioned about those who are totally dependent upon power industry will have some more difficult time. However, what we are not taking into the factoring is non-conventional and renewable energy side. The quantum of solar projects that are getting even now awarded. See, of course, there was some returns issue related to solar industry because the rates have really come down. It is stabilizing, it's bottomed out and it started lifting up. I am looking forward to in the next maybe 3 to 4 years time, renewable energy related, that biomass, solar and wind to be picking up in the country. And allied manufacturing for the panels, which currently is totally imported into the country, investments are happening. One of the companies in Gujarat has already set up a very large capacity for solar panel making. BHEL has set up a second capacity, and I am expecting 2 to 3 more international players to come and set up their capacity in India, looking at the possibility for it. Now, next thing to happen is battery and the energy storage as an industry will catch up, but all these are going to be medium to long-term stories. So I subscribe to your theory. Pressure going to be power dependent industry for the next maybe cycle of 3 to 4 years time. It's absolutely right.
Mr. Unnikrishnan, give us numbers. Will you revert to double-digit growth with an over 30% jump in your new orders for FY18, or is that still a while?
FY18 is already over. So FY18 is a very standard stagnant year for all of us, which I mentioned about. We try to make a double-digit profit reality or closer to that. For FY18-19, well, I am expecting a growth because my order intake had been substantially better than the previous year. There I had orders come both from India as well as from the international markets. A good part of my order intake in the last year had come from international market. So I was not totally dependent upon Indian turnaround story. We have taken actions to ensure that we reach every part of the world to, intake orders. So I am certainly hoping for double-digit plus growth in the coming year, FY19, which is already on. 18 is gone, already completed story, where we'll be stable as an organization, but next year we should be much better off.
Just refraining from mentioning about FY19 because I assumed you would be in the silent period, but good speaking with you, Mr. Unnikrishnan. Candid as you always are. Thanks much for taking the time out and really helping us understand what's going on with the industry and the sector per se.